Good afternoon, good evening, and welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for October 12, 2008. AccendoTraders.com, effective trade plans delivered daily. Each night we get together and work on our trade plan for the next trading session. On the weekend, we add a couple things to just make sure we're online with what's coming down the pipe as far as news, and kind of read some of the newsletters and blogs to see what's out there, and make sure we're on the right side of our trades. We always scan for new trades, set alerts for new trades, and definitely want to make sure that we have time to spend with our family. Wow. That's all I can say about the week that was for Wall Street. The Dow down, that is correct, 1874 points for the week. The S&P down 200, NASDAQ down 297. We're down a third for the year for all major indexes. Wow. Another historic week on Wall Street. That just doesn't put it into words. The stock market basically plunged in dramatic fashion, basically off of concerns about the economic outlook for the rest of the year on a global basis. There was almost a sense of impatience, waiting for the government to do something. And then there was uncertainty that what the government was doing was even working. I mean, the government would cut rates and they were inducing liquidity into the market, but just wasn't doing anything. And again, the growing factor here is the credit market. So you can, there was this relentless selling pressure that was a byproduct of the forced liquidation of funds needing to honor the redemption requests, efforts by investors to meet their margin calls, and good old short selling. Good old short selling. This selling persisted in spite of what the government and the central banks of the world were trying to do. And as I already said, the Fed cut the rates by 50 basis points this week. And as also, you can see that there was a coordinated rate cut announced Wednesday by all the central banks. On the corporate side, we have Bank of America pre-announced its third quarter miss, and that is also going to cut its dividend by 50%. And they had a stock offering that was, I believe, a third below what it had wanted to when it announced their stock offering. GM hit its lowest level about, financial concerns, and there was even talks of a possible merger between General Motors and Chrysler. Alcoa missed badly on its earnings as they kicked off the new earnings seasons. IBM actually pre-announced positive earnings. They actually have their earnings this week coming up here, but they pre-announced their earnings. So certainly not a lot of positive going on in the market this week. Not a lot of important, jaw-dropping news this week. I think, again, the driving force is going to be what's going on with liquidity. Some of the reviews that I heard about the G7 reports that came out on Friday was that it wasn't enough. Again, going back to the impatience and the uncertainty that traders are having, and that I guess what the G7 released was not even as much as what Europe and London did for their crisis. So we'll see how the market reacts. Tomorrow, nothing real important. You can see Treasury budgets, no real important earnings. But this week, we've got Johnson & Johnson, CSX, JP Morgan, eBay, Merrill, Citigroup, SLB, SanDisk, Nucor, Steel Dynamics, and Google as far as earnings. And we're not really watching anything on the splits calendars for now. Before we get into our sector analysis, I want to just take a quick moment to remind you guys about the 30-day challenge, 30daychallenge.accendotraders.com. And we started off a week pretty good. We were talking about technical and fundamental analysis and long-term and short-term investing. And we had a good session yesterday. Those people that showed up yesterday were very appreciative. And we're going to do the same thing next Saturday. This week we're going to dive right on into technical analysis. Today the video I'm going to put up there is going to be about my chart templates, and then each day this week I'm going to focus on one of them and explain how I use it. Today is going to be a general overview, and then again next Saturday will be another link, just like you can see right here. There was a link to access the webinar. Next week there'll be another session that will give you an opportunity to meet with me and ask some questions for review. So 30-day challenge, learning how to trade, learning how to set up our charts, and learning how to be an effective trader based on a system and trade plans and not on emotions. So as we begin to look at our sectors, I want to kind of look at this candle pattern here called the Bullish Morning Star pattern. And you can see it basically consists of a stock that's in a downtrend, gap down, and then a gap up on the third day. Big day down, gap down, and then a gap up and a big day the next day. See, downtrend, gap down, and up. You can see basically it's a bullish pattern. Prior trend is bearish. Reliability is somewhat high. Again, that's all up in interpretation in this, and in this volatile market, who knows? I want to talk about this bullish Morningstar pattern because that's what we're basically seeing on the sector charts now. So let's go ahead and take a look at that. So first up, we have the energy sector, and you can see we're in a clear downtrend, gap down. Will we get that bullish day to third day to complete the pattern? Not sure, but something to look at. Next up we have is the steel and iron sector. We have the same thing in a clear downtrend, gap down. Will we get our bullish day up for confirmation tomorrow? Not sure. Next up we have the consumer durable sector. Again, downtrend and a gap down. Also, let's take a look at the next sector, which is drug sector and biotechnology, downtrend and a gap up. We also have the shipping sector, downtrend, gap down. We'll see. And the final one I want to show you is computer software and even hardware. And now it is time to go to the education portion of our video, and we're using the book Trading the Zone by Mark Douglas. And last Sunday we talked about the experience that you've been in, that we've all been in, when you're in a trade and it's going against you and you use all different type of rationalizations to stay in a trade, when you know if you had a trade plan, if you had a system, that it's broken all those rules and you need to get out. And you know, you're fighting to stay in the trade, and if it ticks one way in your direction, you're like, yeah, and then it ticks 5 directions in the other way, and you know, you start feeling depressed, and you start micromanaging the ticks instead of following your rules, and you keep hoping that the market will come back in your favor, but instead it continues to go against you. And of course, once you finally get out of the trade, you say to yourself, why didn't I just take my loss and get out? Possibly even reverse and get into the trade the opposite direction. Why didn't I do that? And Mark basically goes on to say that when you're in a trade going against you and you're not working off of a system, but you're working off your emotions, your subconscious will block out the opportunity that's actually in front of you. The opportunity is there to get out and get in the other direction. You know, the volatility this week, these past couple of weeks are perfect examples of this. I've shared, you know, that I was in a Goldman Sachs puts back when this all first started, when they first announced the bailout. And I'll be honest, that I did get out of my trade, but I didn't think about immediately jumping into getting into a call. Now, I think it's because of how volatile the market is. Who knew that the market was going to jump off of that bailout? Of course, it's tanked since. But my point is still there. When you look at the market, go back to August last year, on those hanging hammer candle patterns, you know, you have to start to recognize those intraday and say that there's a possibility that the market is reversing it, and I might want to get in on this. But your mind will not see these candle patterns forming if you're already emotionally committed to being in a bad trade. So you got to be able to set your rules in place, follow those rules, and that'll allow you to see each and every opportunity. Emotions have to be out of your trading. He goes on to say that the problem of preventing pain by avoiding your loss is that it can't be done. The market does generate patterns that repeat, but they don't always do. So you have to be able to see the opportunity, execute the trade, and then when it doesn't happen, it can't be a painful thing. It just has to be okay, didn't work, on to the next trade. So to get the full version of this, remember it's about 30 minutes compared to this 10 minutes on YouTube, MySpace, Gather, wherever you're watching it. Go ahead and subscribe to the podcast. The podcast weekly version is free. I should state that. But if you want to become a paid member and get our daily videos, AccendoTraders.com, video.html. Every day we put our videos to help you prepare for the trade the next day. And we do have 3 more days for those people who want to get our free trial membership. The free trial membership starts on October 15th. We're going to take it to the end of the month. To get those daily memberships, we're looking for testimonials about the videos. And don't forget about the 30-day challenge. 30-day challenge at AccendoTraders.com. This week we're focusing on technical indicators. Trade at your own risk, and I will see you guys next time.